Hi everyone, welcome back to my channel. So for those new here, hi, my name is Jenny. I am a family medicine physician and a mom of two. You know, on this channel, I am very open about my school loans. I owe $350,000 in student loan debt. I am also very open about the process in which I am paying them back, and I wanted to take you on this journey with me, not only to share these experiences, but to teach you, and hopefully it will save you money in the process. So with the CARES Act and with this pandemic and with public service loan forgiveness, I have learned some things that I wanted to share with you, and some of the things that I'm doing that can possibly save you hundreds if not thousands of dollars, whether that be you are with the public service loan forgiveness program or if you plan on paying off your loans quickly. I think this information is relevant to both. So if you are interested, then keep on watching. All right, so in March of 2020, there was a relief package with the CARES Act, which made your interest rate from whatever it is to zero. For me personally, I had a 6% interest rate on my $350,000 student loan debt. And so really each year, my loan should increase by $20,000 in debt at 6%. But with the CARES Act, the interest rate was now zero. And that was originally from March of 2020 to September 2020. They've now extended the date. They have now extended the date to December 31st, 2020. It's very unsure how long that this will last. It's possible that they may extend it further, but nobody knows. So as of right now, the big question is, do you pay off your loans now that your interest is zero, or do you hold off? So that comes in two situations. One, are you with PSLF? Or two, are you trying to pay down rapidly? So let's start with PSLF, Public Service Loan Forgiveness. They are very finicky with how you qualify. So one, you have to have the right loans to qualify. I think they're only Stafford loans. I wrote them down. So they're only direct loans or Stafford loans. And one of the biggest things that I regret about the whole loan process was actually consolidating, because I had both qualifying loans and unqualifying loans. And once I dug deeper, I had about $20,000 in loans that did not qualify for public service loan forgiveness. But I thought at that time that I needed to consolidate everything to get into this program, when that was not necessarily the case. I could have just left the $20,000 on the side and told them that with these other loans that qualify, I wanted to enter the public service loan forgiveness program and pay under a income-based loan repayment program. Basically, my biggest regret is consolidating, because now I have to pay off this one huge loan at this set interest rate. I can't pay off the largest interest rate first, and then after that's done, it will decrease my overall interest rate burden. Now my whole loan is at 6%. So I do regret that part, but I originally thought that I needed to consolidate to enter the public service loan forgiveness program. And I'm here to tell you that you don't. So most residents that I know will enter the public service loan forgiveness program at least during residency, and that's 3+ years. For public service loan forgiveness, you only get forgiven after 10 years, and that is 120 qualifying payments. Does not matter if you pay more. Let me repeat that. It does not matter if you pay more. And currently, during this pandemic, all student loans are in forbearance, and each month of zero payments also qualifies towards the 120 qualifying payments. So in the last 8 months, I think, yes, in the past 8 months, those $0 count. So if you were paying extra, those extra payments do not count towards public service loan forgiveness. And in the end, you will only get forgiven less. Of the 120 payments, you can only have one qualifying payment a month. And so the $0 payment qualifies for the PSLF, 120 qualifying payments. So if you plan on continuing PSLF, please, please, please do not pay any more towards your loans right now. If you're worried, then put that money inside in like an investment account or high interest rate savings account or something like that, and pay it off later in case you don't end up using PSLF. Because ultimately, you are shooting yourself in the foot, right? You are just paying more to something that will be forgiven. Oh, another correction. I think that in a previous video, I said that you will have a tax bomb. I was wrong. So with public service loan forgiveness, you have no tax bomb. And what a tax bomb means is that all the money that is forgiven will count as income, and then you would have to pay tax on that income that year. That is not true for PSLF. So I repeat, you have no tax bomb for PSLF. You will have tax bombs on other repayment programs like Repay, Repayee, IBR. After 25 years or whatever, if you still have a remaining balance that they forgive through those programs, then you will still get a tax bomb and you will still have paid taxes on that income forgiven for that year. So moral of the story, if you plan on public service loan forgiveness as your payment plan, do not make extra payments right now. I know it sounds scary, but don't do it because you're saving yourself money. I actually even called my loan servicer and was super worried because the word forbearance, and she told me specifically that all these $0 payments count towards PSLF. I encourage you to call your loan servicers yourselves if you are worried and want to do like your own research or double check. And for those wondering, I do have Nelnet as my loan servicer. All right, so for those of you who are planning to pay off your loan just as quickly as possible and are not doing PSLF like myself, this is what is currently going on with your school loans. So as of right now, with the 0% interest rate, your loans are just sitting there, right? But that does not mean that if you pay, automatically the principal comes down. So let me break it up to you and tell you some numbers using my own loan as an example. So my total loan amount is $350,398.24. And of that, the principal balance in which the 6% interest is applied is actually $325,632.89. So of that interest, if you just do basic math, it's $24,765.35. This means is that you need to pay off I need to pay off, not you, me. I need to pay off $24,765.35 before they actually apply any of my payments to the principal balance. I've also asked this person when I called Nelnet, and she told me that once repayments start happening again, my payments will actually go towards unsubsidized and then subsidized loans first. I don't know what difference that makes since it's still 6% interest on the whole loan. So right now I know a lot of people are saying like all your payments go towards principal. That is not the case. So right now, for me to actively pay down principal, I need to put down more than $25,000. So that's the plan, to put down a lump sum and try to bring down the principal as much as possible. But I wanted people to understand that just because they are making this huge lump sum payment does not mean that you are automatically paying down your principal balance and that each month you still won't have this exponential growth. So the goal is to bring down the principal balance so that every time a smaller number is multiplied by the interest, you'll have a smaller increase in your loans every day and every month. So I've made videos about this in the past, but under Repayee, the government subsidizes 50% of all interest that you do not pay. And I've read up on it, and it doesn't really state where and when the federal government pays for this. I don't know if it's every month. I don't know if it's annually, because I haven't been checking that much on my school loans because it hasn't changed. But I think I'm going to start checking it every month to see if there is a difference once repayment starts again. So as I said, my interest rate is currently at 6%. But if the government is subsidizing 50% of all the interest that I'm not paying, technically the interest rate is 3%. And so I have no motivations to refinance with someone else when the interest rate is that low. And I have other possibilities of getting it possibly forgiven when the interest rate like this has gone down to 0. So there are benefits in keeping it federally owned as compared to trying to refinance it and having them privately owned. So once I figure it out, I will let you guys know what the best time to pay is, and I'll show you guys once I pay my lump sum, like how much it decreases my principal balance by. Because right now, if you do 6% on like the $325,000, every day I am paying $53.49 in interest, and a month that is $1,604.76 at 6% interest rate. So if I don't pay that, so technically it would go up by $800.02. Oh, $802.38 every month. So I'm just trying to figure out if I make the $0 payment and then they pay for half and then I make my payment, would that count? Or if they do it annually, then it doesn't matter. But I'm trying to pay it down fast, so I wouldn't want it to gain interest anyways. Yeah, it's very confusing. So I will do my research. I'm gonna try to figure out how is the best way to pay off your school loans if you're not doing PSLF. If you are doing PSLF, I hope you learned something today. I hope this saved you hundreds, if not thousands of dollars on your student loans. And yeah, if you guys have any other questions that I can answer for you, please leave them down in the comment section below. I love this community where we can share our thoughts and learn from each other. And if you haven't already, please subscribe and join the family. Give this video a thumbs up, and I'll see you guys next week. Peace.